I think what's important is that the trend should be higher. Both gold and silver have traded in a very unique, once in a lifetime technical pattern called a cup and a handle, and it's been going on for a decade. And the handle's been being drawn out more. When they break to the upside, they go dramatically higher. Now, it can also break to the downside, and it would go a lot lower. But everything fundamentally otherwise suggests it should be to the upside. So when people say about price targets, I say a reasonable target to have is $30 for silver and $2,500 for gold.
Gold and silver prices are modestly down in quieter midday U.S. trading August 14. The price of gold reached the lowest it's been in 5 months, and the price of silver reached the lowest in 6 weeks. Gold and silver bulls remain very timid to start the trading week as the US dollar index is higher and as the near-term technical postures for both metals are bearish. Peter Grandich, founder of petergrandich.com, predicts that the price target for gold is $2,500 and the price target for silver is $30. However, it is important to note that the price could also break to the downside and go a lot lower. The London Bullion Market Association has shared their predictions for the prices of precious metals in the upcoming year, 2023. On average, they predict that the price of gold will be around $1,859 during the year, with the highest possible price reaching $2,025. For silver, the average prediction is about $23, and the highest expected price is $27. Grandich points out that silver is now used more in industry, making it almost as valuable as gold. So, it's a good idea to own both gold and silver, with a bit more gold than silver. Only 10 to 15% of annual gold demand worldwide comes from industrial use, the rest going to jewelry and silver investment. In 2022, the global jewelry industry accounted for 234.1 million ounces of the global demand for silver. That was 18.8% of the total global silver demand that year. Just before you watch the Peter Grandich interview and learn more about market trends, consider subscribing to our channel and give this video a big thumbs up. Grandich highlights that central banks are buying more gold because they believe that it will become more important in the future. A survey by the World Gold Council found that 24% of central banks plan to increase their gold reserves in the next 12 months. A majority of central banks also expect to increase the proportion of their total reserves that are held in gold over the next 5 years.
Silver, the interesting thing, I used to get teased by silver investors because they always say, why do you always say it's the second best metal to own? Well, it didn't have the fundamental arguments that it has now. There's such been a dramatic increase in its industrial use that I think it can go neck to neck with gold right now. So I would equally own both of them now, and I would always own 2 to 3 times more gold than I would silver. One thing I say about when people ask about prices, when I used to hear people say, hey, gold's going to 5 or 10,000, and my answer would be, is please, not for at least the next 20 years. And they go, why would you say that? Trust me, if gold is 5,000 in the next 12 months, what's happening in the world for us is not going to be a great thing. So
Yeah.
well, I just think the market is not going to return. It's not going to be the return machine everybody got used to. And there are people living beyond their means, Michelle. And once they recognize that the stock market is not the sure thing or the way to keep their lifestyle ahead of their earnings, that's when the markets will become much more tougher to deal with. And we'll actually have markets where they go down and stay down 10 or 20% from their highs, and maybe take 3, 5, 7 years to trade in the trading range. I'm still not in the camp of a crash. I've not been in that camp, but I'm also not in the camp of thinking that the market can get much higher than its most recent highs. I think it's just going to do what it did for almost 3 decades and trade in the trading range. People don't realize the Dow once traded between 700 and 1,000 for 30 years. Now I think we're going to get for many years, if not a decade or long, where it trades in a range, not yet totally defined, but probably something within 20% either way from here. But I don't own gold because I want to own it because the world's coming to an end. But I will tell you this, central banks have been major buyers of gold for more than a reason of just being a trader or an investor. There's going to be some sort of change in the world where gold is going to play a role again. So if you don't own gold, that's one of the things that you should own.
Grandich emphasizes that Saudi Arabia and the Middle East are moving away from the US and the dollar. They're leaning towards other countries like China and Iran, which aren't exactly friendly to us. China's approach in the Middle East has many parts, and one of the main parts is their focus on diplomacy. This helps them build friendly relationships and have more influence in the region, especially in places like the Gulf area, and mostly with Saudi Arabia and the UAE. Grandich points out that BRICS countries might not make a new currency, but they're clearly distancing themselves from the US. The important thing to note is that they're not planning to talk about replacing the US dollar as the main global currency. They just want to make their trade among each other smoother by using their own currencies. The talks will focus on issues including the establishment of a common payments system, while a technical committee is likely to be formed to start considering a potential joint currency, Anil Sukal said in an interview at Bloomberg's Johannesburg office. Now, back to the discussion between Peter Grandich and Kitco News.
I think this announcement is more going to be that there's going to be more clarity to what the BRIC nations are hoping to do and also increase its membership. What I don't think Wall Street has paid any real attention to and will come back to bite them is the shift for Saudi Arabia and the Middle East in general more away from the states and the dollar and to other people that aren't exactly friends of ours, China, Iran, and things of that nature. And I don't think they understand when you hear Saudi principals talking about willing to sell oil in other currencies other than the dollar, how historically that would be and what that would mean. And I would suggest that 9 out of 10 financial advisors have no idea what that could mean. But it is something I think that's going to be moved to. And I think at the same time, we had a president here that drew down our strategic reserves to levels of dangerous levels at a time when it's clear that we don't have the same rapport or relations in the Middle East that we might have had 10 or 20 years ago. People still have to recognize that it's all great to talk about green energy and what life is going to be 10 or 20 years from now. But the here and now is still the world runs on fossil fuels. And so that would have an enormous impact. My personal feeling, just so you know, is while the August meeting is not going to be the earth shattering, I believe within the next 1 to 3 years, the BRIC and what is happening with BRIC nations is going to rival the Industrial Revolution, because I don't think people understand how many people and countries are moving away from working with the United States in any type of trade or using its dollar. And if for any reason we ever lose the dollar as a world reserve currency, it's been one of the reasons we've been getting away with the type of debt crisis that we've allowed to happen. And if that changes, some of the more doom and gloomers who I never felt I was in that camp, I think they would need to stop being listened to at that point. But I don't think that's happening in August, but I think it's something coming down, not in the too distant future. I think you have to think in pattern of months. I think this is going to gain, I think the BRIC nation stuff is going to gain legs once we see the additions of these countries coming involved, especially with basically using this bank in Shanghai and really just moving away from the U.S. system. When we weaponized against Russia, we made all our countries, including so-called allies, go, hey, wait a minute. If they did it to them, what's to say they can't do it to us? And I think there's going to be a much faster track movement for these countries to at least bilaterally trade and skip the United States and skip the dollar. Whether or not they're going to introduce a new currency to compete or whatever, but I think they're clearly moving away from the United States, at a time when economically we need to be doing more trade in the world, not less trade. These countries now being a player in the Middle East, and whoever expected that you see the Chinese leader in the Middle East helping to try to make peace. I mean, no one could have imagined that 10 years ago, even 5 years ago. I think what they're going to do is, I think the BRIC situation is going to actually help them, because they're going to be doing more trade in a way that what we used to might have come to the United States. Everybody's talking about, we're pulling out of China and we're going to India and places like that and all. Understand that China's economy now is not just totally dependent on export. It has a lot of internal growth, but right now, some of that internal growth, which was based on real estate, is hurting. And it all depends on what decisions they may make, whether that turns into a fiasco or it bottoms out and gets better. And that's why I say I'm on the fence, because it can still go both ways right now.
What are your thoughts on the recent trends in gold and silver prices? Do you think they will eventually meet the predicted targets, or could they go even lower? Let us know in the comments. That's all from us. If you liked this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos. Currently, 93% of our viewers have not subscribed to our channel. Our next goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.